Okay, let's talk about the next topic about Roth conversions. It's really something that's new, that's really being discussed in the retirement planning space, or people that are nearing retirement. What it is an opportunity for those who have put money in a qualified account. Well, what's a qualified account? That's a tax deferred account, a 401k, 403b, those types of accounts where you did not pay taxes on that money. It came out of your check and it went into an account. Okay, tax deferred, great. You saved it, it grew, it's been up and down, but it grew, and therefore you're sitting on a nest egg. But now when you withdraw it, you have to pay taxes. Well, what is commonly being used now is what we call Roth conversions. Well, let's take that and convert it to a Roth. Well, one of the things that happens is you still don't avoid the tax implications. You move the money, you can move, portions of it or an amount, into a Roth IRA, we call the Roth conversions, but you have to pay the taxes on it. But what the money that you put in there does tend to grow because you haven't accessed it yet. And therefore as it compounds, it grows and covers the taxes that you paid. Therefore, that amount and the amount that you converted becomes a tax-free account. That means that money is tax-free. Now, that's what they call a Roth conversion. You're converting it into a Roth, from a qualified account to a Roth account. That really helps. Now, that's what a Roth conversion is. Now, how does it work? Well, when you roll the money over, you pay that amount that you rolled over, that tax component. And as it grows, it becomes tax-free. Now, there's no cap, there's no income requirements. At that point, later on in life, you can avoid your RMDs, things like that, or you can leave it as a legacy, a tax-free legacy for your beneficiaries, for your children, or whoever's in, you're going to receive your assets when you pass. But these are things that how it works. It allows you a lot more flexibility later in life. And you tend to use that when you are a high net worth client, people that have a lot of money, or people that have the resources to pay off the taxes without impacting too much of their retirement account. But it's still worth looking at in a retirement plan. It's still worth looking at if you have the resources to be able to pay that tax bill, that's required to converting the qualified account, so it really is a new tax strategy that people are utilizing, or a retirement strategy really, that utilizes the tax component of it, to make sure that you're developing and having an option to have tax-free income. So those are some of the things that are happening today, but I wanted to talk about the Roth conversion because it is a big part of the retirement planning that is going on a daily basis out there for those who are nearing retirement or in retirement. So that is something that I encourage you to look at as part of your strategy. Okay, it is a very important component because whenever you can receive tax-free income or tax-free money, take it.